What exactly is going on with the Cardano market? Well, let's dive right in. As it stands now, the Cardano market is in an interesting position. It's like a coiled spring ready to leap. The current price of Cardano is eyeing a high of 81 cents. Now, that might not sound like much in the world of cryptocurrencies, but remember, every cent counts, and these incremental increases can add up to substantial gains over time. But what's causing this potential rise? It's all down to the MVRV ratio. Now, for those of you who may not know, the MVRV ratio is a key indicator in the cryptocurrency market. It's used to gauge the average profit or loss of holders of a given coin that are currently in the money. When the MVRV ratio signals a rebound, it generally means that the value of a coin is set to increase. And right now, the MVRV ratio for Cardano is indicating just that, a potential rebound. Now, it's important to remember that the world of cryptocurrencies can be unpredictable. Prices can fluctuate wildly, and what goes up can also come down. But currently, the indicators are suggesting a bullish surge for Cardano. It's like the market is holding its breath, waiting for the leap. Of course, this doesn't mean you should rush out and buy up all the Cardano you can find. As with any investment, it's important to do your research and understand the risks. But it does suggest that those holding Cardano could be in for a pleasant surprise. To sum it all up, the current state of the Cardano market is one of anticipation. There's a sense of potential, a feeling that something big could be just around the corner. The MVRV ratio is signaling a rebound, and the price of Cardano is eyeing a high of 81 cents. The Cardano market, it seems, is poised for a significant shift. ADA, the cryptocurrency of the Cardano platform, recently experienced a price correction. This is a common occurrence in the crypto market, where fluctuations are part and parcel of the game. But the remarkable thing about this specific correction is where it found support, at the Fibonacci level. For those unfamiliar with this term, the Fibonacci level is a technical analysis tool that traders use to identify potential support and resistance levels. It's based on the Fibonacci sequence, a mathematical concept that's found throughout nature and also in financial markets. When ADA's price dipped, it bounced back at this critical Fibonacci level, which could signal a potential turnaround. But the Fibonacci level isn't the only indicator hinting at a bullish surge. Other indicators are aligning in favor of ADA as well. For instance, the MVRV ratio, a metric used to assess whether an asset is over or undervalued, is signaling a potential rebound. This could mean that ADA is undervalued at its current price, setting the stage for a potential price hike. However, it's important to remember that these indicators are not guarantees. They are tools that traders and investors use to make educated predictions about the market. Crypto markets are notoriously volatile, and unpredictable factors can always come into play. But even with these caveats in mind, the signs are promising for ADA. The support at the Fibonacci level, coupled with the favorable MVRV ratio, suggests that the recent price correction might actually be a springboard for a bullish surge. So while price corrections can often cause worry among investors, it's important to take a step back and look at the bigger picture. Corrections are a natural part of market cycles. They can provide opportunities for investors to buy at lower prices before the next potential surge. As we've seen, the ADA price correction may not be a cause for concern. In fact, it could be the precursor to a bullish surge, making it an exciting time for both current and potential ADA investors. The upcoming Bitcoin halving may have a profound impact on the altcoin market. Now let's dissect what this means. You see, Bitcoin halving is an event that happens roughly every 4 years where the reward for mining new blocks is halved, hence the name. This means that the number of new Bitcoins created and earned by miners with each new blockchain block is halved. This results in a decrease in the amount of Bitcoin coming into existence, creating a shortage in supply. This event is significant, as it can trigger a recovery in the altcoin market. Altcoins, for those who may not know, are cryptocurrencies other than Bitcoin. When Bitcoin's supply decreases, it often leads to a rise in its price, creating a ripple effect on other cryptocurrencies. This is due to the fact that Bitcoin is the first and most influential cryptocurrency. When it moves, the rest often follow. So, how does this affect Cardano? Well, the Bitcoin halving could lead to a breach of overhead resistance for Cardano. Overhead resistance is a level that an asset has trouble moving above due to significant selling pressure. If this resistance is breached, it could mean a significant upward movement for Cardano's price. In fact, some experts are predicting that if this happens, Cardano could reach a target of 68 cents and then possibly 81 cents. These are significant increases from the current price level and could mean substantial profits for Cardano holders. However, it is crucial to remember that these are just predictions. While historical data and market trends can provide some insight, the cryptocurrency market is highly volatile and unpredictable. Therefore, it's essential to do your own research and consider all factors before making any investment decisions. The Bitcoin halving could be a game changer for Cardano and other altcoins. So, whether you're a seasoned crypto trader or a beginner, it's an event to keep an eye on. It's a time of potential change, and who knows? You might just find yourself riding the wave of the next big bull run. So what does the future hold for the Cardano market? We've spent some time delving into the current state of the Cardano market, dissecting the recent ADA price correction, and reflecting on the potential impact of the upcoming Bitcoin halving. It's been quite a journey, hasn't it? Now let's peer into the crystal ball and ponder the possible future developments in the Cardano market, building on the insights we've gathered from our article. Firstly, let's remember that the Cardano price is currently eyeing a high of 81 cents, as indicated by the MVRV ratio, which signals a potential rebound. We've seen that the ADA price correction found support at the Fibonacci level, with indicators suggesting a bullish surge. Now, this is crucial. The Bitcoin halving event on the horizon could trigger a recovery in the altcoin market. If that happens, we could see a breach of overhead resistance and a new target of 68 cents, followed by 81 cents, but let's not get carried away. As with all investments, there's always a degree of risk. The crypto market is known for its volatility, and while the signs are promising, it's essential to remember that markets can be unpredictable. What we can take away from this discussion is that the Cardano market is in a fascinating position. The interplay between the ADA price correction, the Bitcoin halving, and the broader altcoin market creates a dynamic and exciting environment for investors and enthusiasts alike. So as we gaze into the future, we see a landscape filled with potential and ripe with opportunities for those who dare to navigate it. Only time will tell, but the signs suggest that the Cardano market could be on the brink of a significant shift.